Here we are back for session 2. Got our gold charts pulled up again as per normal. You can see over here on the hourly chart, this is exactly where the CPI hit. And this big run up since then, it's just slowly been drifting back down a little bit, which means if you look at the Awesome oscillator, we're still well above zero. But for the last 10 or 12 hours, it has been red histogram bars, steadily coming down those stairs there. Hasn't reached the bottom yet though, which means buy trades are still in fashion. We've got a bit of green price movement going here the last few candles, turning that MACD line towards the zero line. That's all we need for a buy signal. So we may in fact actually get a trade today. But for now, let's check out our economic calendar and see what's been happening. Quite a bit busier than yesterday. We can't fit all of today's stuff on one screen. So I won't talk about everything, but we will just look at some of this stuff. New Zealand current account less than forecast, -1 billion. Korean unemployment rate 2.8% instead of forecast 4.1. That is good. China, a lot of misses on their yearly figures, so that's retail sales, industrial production, fixed asset investment, missing their targets on all of those for the yearly. Great British pound at 9 o'clock, plenty of numbers coming out of there. PPI month on month, 0.4% against a 0.0% actual. Like a lot of the other European countries, Great Britain coming in higher than expected, and even worse on the CPI month on month, they were 0.7% actual, and they thought deflationary environments were going to come with a forecast of -0.1%. Again, this is really far out, 0.8% out, not in tune with the economy. Meanwhile, French expectations on CPI here, 9.45, they had 0.6%, and they got 0.6%, so they nailed it. And then same with the HICP over there, 0.7% forecast, and they got that 0.7%. Really strong forecasting on their CPI, definitely compared to Great Britain there. Well, that's what we've had then. Still to come, more CPI. We got 11 o'clock on the euro in Italy, CPI month on month and HICPI month on month. 12 o'clock in the euro, industrial production month on month, wage costs year on year. 3 o'clock, the Indian trade balance. 3:30, Canadian CPI month on month. That'll be an interesting one to watch. And also we get the New York Fed Empire State Manufacturing Index. Some of these American ones there, they're more likely to have an impact on the gold US dollar, obviously, than these other ones. The European ones, interesting to us, but not actually going to affect the gold chart. 4:15 though, Fed industrial production month on month and year on year coming out of the US. So that might have an impact, but it's probably not enough. And then 5:30, the crude oil stocks change. Again, not really going to have an impact on us over on gold. If you are trading on oil, it's obviously a very volatile time, but we're not. We're trading gold. We can just get back on the chart, and hopefully we're seeing a green candle here, which is nice. So when this closes off at 15 seconds, hopefully it gets us that much closer towards that zero line. And there's that jump up. It's going to still take a while to get back up, probably 5 or 6 periods at least, and that's with a steady sort of run like this. But at least as for now, it is headed in the right direction. It came down pretty far though. So we're just going to wait for our technical signal to come at that zero line crossover. And we'll also take a look at some of these economic numbers as they fly in. The way it's going now, we are looking just a few periods away from that entry signal. Price continuing up a little bit. As long as we don't see any sharp drops like these red candles here, we should be good to go. There's that Italian CPI coming in 0.4% actual against 0.5% expected, so it's slightly under for them. They will be happy with that. And similarly on the HICP coming in 0.2% against 0.3% forecast. Good in the current climate to run a little bit cooler than expected, I would say. With a bit of a surge here, are we going to see when this candle closes? It's going to be close. Yeah, it is poking. Ooh, now it's not. So if this candle right now finishes green like that, there's a good chance it will be a close across the zero line. But if it finishes red as it is now, it's not going to cross over. And so it is going to close red here, which means we're not in just yet. We're going to need a couple more green candles. Could still not cross at all otherwise. We see the line there flattening on the MACD. Could very quickly turn. And it is another stiff red candle that turns that MACD line. It is pretty sensitive though, so we could still get the signal. So close though, so close. 11:35 now, just a couple periods after, and it has dropped sharply. It's going to test this support level down here. If it gets through it, well, we're already looking like we're going to be waiting a while now for the signal. Just gone 12:15. Price does look as if it wants to make a move up here, and we certainly want to see that happen. Not really been doing much the last 30-40 minutes or so, just trying to figure out what's next for it. we'd like to see that green come and get that buy signal before the Awesome Oscillator continues across that zero line. Should still have a bit of time for that, but that last period did steepen it a little bit from these candles over here. Across the Eurozone, we did get the industrial production month-on-month figures at 12 o'clock come out. They got a 1.5% actual. Should be happy with that, considering the forecast was negative 0.1 and the previous was also negative 0.1. That ramp up of 1.5% should be well received. Didn't get that wage cost year-on-year data come through. We'll keep looking out for it in case it eventually does. And we'll hope this signal comes. That candle has gone really green, and it looks like it is going to be an increase in volume as well. So if we can get one or two more of those, suddenly we are back in business and hopefully getting that signal. Price coming back off those highs a little bit though. We need another one of these green candles. That MACD line hasn't turned yet, so the momentum is still with us. But we need the boost, we need the volume, we need the big volume buy-in. Get us up there. And what do you know, you pray to the chart gods and you shall receive sometimes. Not that often, to be fair. But here it goes. We did get a nice green candle just off the back there. And this MACD is now pushed above the zero. If it closes like that, which has a high probability it will, that a very strong reversal, then we are going to be in the trade here. Okay, this entry looking all but certain now. Let's zoom in on our 5-minute gold chart here. And let's pull up that standard deviation indicator. There it is. Now the standard deviation indicator, it does jot around a little bit more than the ATR does. So we're going to have to decide on this now. So we'll go for in between those. So we'll go for 0.700 just to make it round like that. So we go 3 times standard deviation for our stop loss. So that's 2.1. That's 21 pips for each of our half trades. So you can see our risk calculated on screen now. And there's our 2 buy trades. Ever so slightly off from one another as that price does move pretty quick. And it is moving a touch against us now, but let's plug this in here. So we're saying for one trade, 210 points to the stop loss, 21 pips, and same for the take profit. That's 3 times that standard deviation. There you see there, a good bit of room to move. If it can go up, that's right at the support level here. Be optimistic for that. And then over on this one, we can just set the stop loss now at the same 3 times standard deviation. And we can also set the trailing stop loss at 3 times standard deviation. So we'll try and manually trail this stop loss because it won't kick in until we actually get that far into profit. But we will look at doing a little bit of trading ourselves if it does get up here into profit. Long way to go, but at least we've got a signal now. So we either get a take profit, a stop loss, or either the MACD or the Awesome Oscillator reverses against us, causing us to manually close the trade. But for now, we are in and we are up a little bit as this runs into our favor. It's good to see. Price had just been ranging since our entry, but last period come down quite a bit. Sellers entering the market there. It's wiped out the price increase that initially got us into this trade to begin with, about halfway towards our stop loss now. So for that reversal. Has come back up closer to our entry price now, still ranging though, getting just a little bit positive there for a second. That's what we want to see. Get up there, get going. This does look like a bit of a wedge pattern here where it's making those higher lows there to there, and it's hitting this same resistance level, but we could well see a breakout to the north there. That's what we're optimistic for anyway. We're seeing price move pretty nicely to our favor here, or it certainly had done. It's coming back there, but I'm going to trail this stop loss a bit further forward. So instead of 210, we're going to reduce it by 1/3 for now, which is 140 points. So that's absolutely fine. We've still got our trailing stop loss on there at 210 points. That will kick in up here if we're lucky enough to get there. Really strange last few periods in price. It came all the way down here with this big red candle and then immediately reversed that with a green candle, only to come back once again into the red. And now we are looking like we are going to get these losses from this candle. Who knows though? This could easily turn straight around, give us another one of those green candles right there, and we're at the profit. Pretty erratic, but this is why it's nice to have that wider stop loss, because you're not going to get knocked out by silly price moves like this. So far it's okay. Just gone 3 o'clock then, the New York Forex session opens. Still hovering around our price here. It really hasn't moved since we got in over here. Let's just double check our Awesome Oscillator. Yeah, histogram bar is still coming down, but they very much slowed and it's still well above zero, so we're absolutely fine to be in the trade. especially with the MACD line still above zero also. So we'll continue to wait as this ranges around our entry. It's quite a boost here. Looks like the buyers do want to push this to our take profit. We're going to have a look at this trailing stop loss anyway, just in case it doesn't. And we are going to drop that now. It has triggered. In fact, the trailing stop loss has moved into action there. So we are in guaranteed profit right now. The open of the New York session comes. People keen for gold. Pushed up we go. And there you can see one of our trades taking. Right now it's the peak. Hopefully it becomes higher than that, so our trailing stop loss can come up all that way. And that's the trade there, $52 in the bank. So that is an extra 0.5% on our $10,000 capital. Really elated with that, especially since now it looks like it might come back down a bit, but very volatile. We will keep watching this, and we will keep watching our trailing stop loss. Price is coming down pretty strongly there, very close to our trailing stop loss. Was a bit of a flash in the pan high there. Whether it's going to come back enough to trigger that, we will see. Price has come back to the good though, and it looks very close to pushing our trailing stop loss a little bit higher, guaranteeing us that much more profit. Price is really making a move of it here, and so too is our trailing stop loss. Bumps up again a little bit there. What a candle here. This buying pressure keeps on coming in. It's just perfect here. Stop loss again bumping up, very much nearing our take profit level of the first sub trade. This is all in one candle. If it came back to its low, it would in fact trigger the stop loss, but buyers are really enjoying this run right now, and we're in it with them. And we are in that spot now where if our trailing stop loss triggered exactly where it was, we would still make more profit than we did on our first sub trade. And here it does actually come down as if it's going to threaten that stop loss there. This is on the release of the New York Fed Empire State Manufacturing Index numbers, and also Canadian CPI month on month coming out as well. Anyone who wanted those wage costs from the Eurozone year on year, they did finally come through. It was negative 0.4 against forecasts of 3.5. Pretty poor for them. And also we had India's trade balance at 3 o'clock. That came in at negative 13, well, near enough negative 14 billion against a forecast of almost negative 6 billion. It's not great for them there. They haven't been having the best numbers coming out of India on the rupee. Still though, we're really in the heat of the day now. There it goes though. That is the trailing stop loss gone, and had to end up yet a little bit better. About 10% more profits that we eked out from that trailing stop loss. Not a lot in the grand scheme of things, but it can certainly add up. No commissions, no swaps, so pretty good there. More than 1%. Even if we got into a new trend now that was a complete 1% loss for us, we'd still be up by a very minute amount. Happy days on that trade though. Let's get back on the dual chart. We can see again clearly only buy trades. This has gone up quite a bit the last hour or so, coming back down now. It's likely that if price came down with a strong force behind it, the MACD line is going to cross before the Awesome Oscillator does. But we'll see. So far so good. Canadian CPI month on month, pretty nice for them, especially compared to the Great British numbers we've seen this morning. They have a 0.2% actual, which does match the forecast of 0.2%. I'm sure they'll be pleased with that compared to the 0.6 previous. And the same with the core CPI there for them, 0.2% actual against 0.2% forecast. We've also got these New York Fed Empire State Manufacturing Index numbers coming through. This is where they're surveyed in the New York area about how they feel about manufacturing business conditions at the moment. They've given an actual of 34.3, above the forecast of 30.5, and plenty above the previous of 18.3. It's good signs. As we see on this 5-minute chart, wow, the price comes all the way back up from where our stop loss was there. Really quick movement. But hey, with a move like that, we never know exactly where it's going to end up. Pretty good to take some profits where we did. But in terms of the economic calendar, next up we got 4:15 Fed industrial production month on month and year on year. Month on month is forecast to be flat. I think they'll be looking to beat that. And that's about the last one that should affect us really for the day. There's not going to be any impact from this oil stock exchange onto us. Although it is obviously super interesting if you are trading on the oil. Don't know if we will get another signal from the day. We're pretty happy with what we've had so far. But we will stick around for a bit to see those results and see just in case we do get an entry. You never know. And we are seeing a heck of a sell-off here. Look at these red candles, particularly this last one. Real nosedive. That MACD line is going to close well across the zero. That signal is not ours for the taking because the Awesome Oscillator is still above zero, as we know. But you can really see the impact it's having here. That downward pressure wiping out a lot of these gains so far that came yesterday from the CPI numbers. So gold struggling now. And there, unsurprisingly, the MACD does make its close far below the zero line. That means we are now looking at this reverse crossover to see if it can come above zero. But 4 o'clock, we'll see how much this Awesome Oscillator suddenly gets pulled down. 4 o'clock, and we do see quite a drag on the Awesome Oscillator, not below zero though, still a way to go for that. 4:30 now, price not doing much, just been ranging the last 20 minutes or so. We did get those Fed industrial production month-on-month numbers from the US, 0.4% actual against a flat forecast of 0.0. It's good to see, nice improvement on industrial production. But the year-on-year did miss its forecast of 8.3, only pulling in a 5.9. As you can see, the MACD line slowly moving up, but price, if it comes back down, it will drag that line with it. No clear sign of when we're going to get a signal at the moment. This is likely to come down at 5 o'clock more, the Awesome Oscillator there. Just over an hour on now, it's coming up to 20 to 6, and we can see those crude oil stock exchange numbers. Minus 6.4 million actual against minus 1.8 forecast. But if we look at the charts, we're seeing price come down again. It's just found new lows in these new candles here. The MACD line nowhere near the zero. It does look as though the Awesome Oscillator hourly chart is going to cross over that zero line in 20 minutes at 6 o'clock now. So on that basis, it will likely take us a very long time to get into a trade. We are going to call that the end of the session. We are pretty happy with the trade that we did get, which is right there. Happy enough with it that we will be back trading this strategy again for a third session tomorrow. Let's just take a look at that trade in the journal. There it is in all its glory, our one trade, our winning trade. We are up $109.68. Great stuff. Really enjoy that. It was a pretty good trade. Once we first got in, it ranged for quite a bit there, but it took off and it managed to take some profit. We saw a retracement that came quite close to the stop loss of the second sub trade, but that 3 times standard deviation, it was enough to stop the retracement. And then once the volume came into the market, we really got a run in on the uptrend there. It did come back down as quick as it went up, but we were good to get out of this trade because it never got back up to the levels of where our trailing stop loss or our take profit triggered. So yeah, really happy with that trade. Hopefully we can replicate it tomorrow.